contacts,
Yeah.
and they actually work fantastically. Like perfect vision. I haven't like it's beautiful, and then like 45 minutes in, it's all smeared out and horrible and blurry because apparently I'm depositing a bunch of proteins on the surface of the lens, and I've tried a bunch of shit and I can't get it to stop.
Fuck, that
So
sucks.
I have, I'm so close to perfect vision, and I'm just leaking proteins.
How long have you been legally blind for?
I don't know.
Has it been the whole time?
Could be. I don't know. It happens over such a slow amount of time, and my eyes did a pretty good job of compensating because it's not like things aren't blurry per se. There's like doubles and in some cases triples of things, and so it appears blurry.
Oh.
But I can still like in within all of the blur, I can still see all of the things.
Hmm.
And so I think my brain just compensated for a lot of that subconsciously, and I didn't even realize it until it got to the point where I was like, "Hey, I see double of all of these letters. Like there's like a reprint 10 points below everything." Yeah, it was in a my brain hallucinated into perfect vision. Yes, 3 of them. It
Interesting.
was interesting.
You must have felt really proud about your 3 peni. Penipides? What's the
Well,
appropriate
I
plural for
mean,
penis?
the weirdest thing is that I got 3 penises and my wife got 3 vaginas. It was a very strange time.
Is this why you were asking me about the cock vortex way back when? Was that the inspiration?
I I have no comment.
Where's Dork?
We're not geriatric. Also, I have had back issues in the past, but right now my back is good. So,
Mine's
but I
feeling a little
I
bit
know
better.
I don't know exactly what you're going through because unless you're just being a big baby, it sounds like you're worse than me because I never had to take muscle relaxants. I just kind of laid around like a sack of shit for a few days.
I probably could have done that. But I was worried that like I actually herniated a disc. So I went to the doctor and they were like, here's muscle relaxants so you don't have to lay around like a bitch for a few days. And I was like, perfect. Load me up. And they didn't do much yesterday or for most of today. And then I almost fucked my back up again at the end of the day today.
Yeah, you got to be careful, man, because like the dumbest shit. Like you
Yeah.
think it was dumb the first time it happened. Like you'll do the dumbest thing and you'll be like, "Oh god, I could have just yeah, you got to baby it. You got it's worth it. Just give it a few more days. Wait until you're just like bouncing off the walls ready to be like this is ridiculous. I have to move and then take it slow. Cuz
So
if you like
I
do it
did that I
again,
did that after the stream today. I got like real doped up and then I just started like I like went out and was hobbling around and then I got
you're like I'm gonna go walk down the street, and before you know it, you're taking an Uber home and like trying to DoorDash fucking icy hot pads to your house because you can't even walk to your door.
Fortunately
No, that
though.
actually happened to me. I was at some workshop, so I was traveling, and I was at a hotel, and like thankfully the workshop was in the hotel, so like I just had to like hobble back to my room. But it got to the point where like I couldn't even get out of bed. Like I was just relieved I made it back to my room, and so I DoorDashed icy hot pads and like other things, and they wouldn't let the fucking guy up to my door. They were like, "You have to come down to the lobby to get it," and I was just like, "I am not able to move,"
I fucking hate it when they do that.
and so
I one time I
yeah,
just
I had to
left my
like
food down
fucking.
there.
I just like hobbled down there like half naked just like middle of the day with a bunch of people like dressed to the nines, and I'm just walking around just like with my ass out hobbling over to like this crusty bag of CVS goods. So yeah, don't fuck with your back. It'll fuck you back.
So I have the list of the muscles that I tore here. I tore, quote, several transverse process, two interspinales, and the lilocostalis lumborium.
Oh, I see. You tore muscles. Yeah, you're fucked.
Yeah,
You're
I
so much
tore
more fucked than
I
me.
tore muscles and I tore like some of like the connective tissue also.
Mm.
But he said it'll heal in like 2 weeks. He said it's gonna go great. And I'm on the peptides, the peptide stuff. So like the inflammation's apparently not nearly as bad as it should be.
Hmm. Well, there you go. Silver lining.
Greg, you can't call them trans processes anymore.
Mm.
No, the 5x5s didn't have anything to do with it. I have perfect form. Also, I've not been doing like heavy weight. It's been very mild. I'm doing like 110 on bench, 150 deadlift, and then like 125 on squat. But I haven't moved weights up at all. Just
Yeah,
doing
that sounds pretty
like
reasonable
high
for.
reps, low weight.
Yeah, I like that. That's a
That is
sign of
reasonable for
a.
somebody who's 4 feet tall and weighs 300 pounds.
That's the. That's the sign of a true man who feels comfortable in their body. Just like, you know what? I don't have to max this shit out. I'm just gonna pick a comfortable, reasonable number and just kind of, work it a little bit.
Yeah, well, I mean, I specifically didn't want to blow my back or shoulders out. And
Welcome.
didn't matter.
Sorry, I'm late. It's
The
6:27
moral,
p.m. and
the
my
moral of the
fiance showed up home.
story, the moral of the story is Donald Trump is right all along. Don't exercise. Just eat McDonald's.
Yeah,
You
yeah,
got
live to
congestive
be
heart
80.
failure.
This guy's got great
I
form.
mean,
Look at that.
Donald
Look at that
Trump's like
hunched lower back.
90. Oh God. Oh, stop! I can't do. Gross. Jesus Christ.
Why would you do that to yourself?
I feel like he's probably actually really, really strong and he can do that, but still dangerous.
Yeah.
Yeah, it's one of those things that you should never do. I'm hoping that those weights are fake and that
They might be,
really
yeah.
45 pounds.
I don't think they are, though. Those
They
look
have-
like kind of like Olympic plates.
Yeah.
Like the
I
training
feel
ones.
like-
But they're perfectly aligned, which makes me think that they
See,
were
I
carved
feel
out
like
of
he must have
styrofoam.
done a few of those, and then whoever took this video is just like, he's gonna do one more. I need to take a video of this and show all my friends that this guy's gonna kill himself. Which is the
Well-
problem with society today. He didn't intervene and be like, "Hey, your form looks like ass." He just,
Nobody ever does that at the gym. At least the gym I've been going to. Nobody ever like talks to anybody. Because I tried it. I was like, hey man. Like this dude was doing like incline presses. But he kept like opening up his shoulder joint when he went back. Which was like making me sick to my stomach. So I said something. And then he was like, he just like looked at me for a really long time and didn't respond. I was like, all right, man.
That might have been a one. I don't know. I feel like
Enjoy your limited arm
like
mobility.
I feel like the people that are always at the gym actually secretly would just love for somebody to just like be like, "Hey, am I doing this right?" The problem is that Jinjin is correct. Is that those people are all like scamping on the women at the gym, which is just weird because like, you know what they're really after.
Dick.
No, the men, not
What?
the women.
Oh.
And
Well, that's what I meant.
and
Hold on.
When I'm
we go to different gyms.
oh. I don't know. I feel like the easiest way to eliminate horiness is to exercise. I don't understand the whole dynamic of I'm going to go to the gym to pick people up.
Yeah, but
Doesn't
CrossFit's
make sense.
literally just a sex cult.
Hmm.
So explain that shit.
Is it?
Have you ever been to a CrossFit gym? Everybody's fucking everybody else. Like, I'm convinced that they have cult orgies. We could ask Nuke. He knows all about it.
Mm.
He's
I thought
part
they
of it.
just flipped tractor tires and then smacked each other on the ass and said they're all awesome.
Then they fuck.
Yes, Duke, it's women's fault for being in public, because if they don't want it, the body has a way of shutting that down. Actual quote by, I believe, a U.S. I want to say senator, but it was probably a U.S. representative.
That sounds like something a U.S. representative would say.
In response to just like the terrible abortion, or the never-ending back and forth, and it was just like, well, what about babies of rape? And it was like, well, if the woman didn't want it, the body has a way of shutting it down. So if you had the implication was that if you were raped and you had a baby, then you wanted to be raped, and because you wanted the baby.
I hate this timeline.
And here we are. And here we are in 2025. And abortion's illegal and Donald Trump is president. So probably should have seen that coming.
Yeah, I was going to say this is very early to start talking about baby farms and rape babies. But
we're getting really close to baby farms, aren't we?
Questions,
Jesus.
anybody? Questions?
Questions about the options data platform.
Yeah, I got to make dinner, so I'm probably
sorry,
What?
just letting you know.
What
it
is
was,
Gammastrike? It's a website. It's not a person. It does not have its own. Oh, thank God.
Old Sheezy. What's up, my friend?
What up, gangsters?
Welcome back.
Gammastrike will make your ass bigger, but only in the best ways. Ass bigger, but only in the best ways.
Ooh, that was a weird echo.
Called acoustic echo.
So yeah, baby farms.
Let's do
No,
it.
not baby farms.
I mean, we could, I guess.
Might come down to it. All right. So my question is, I guess, is usually like how I'm figuring out what I'm doing, or all right. So like, I've been getting into credit spreads, and I noticed that like exposure is really important. Like, if there's like a big jump increase in DEXA and GEXA increase, and then especially if like DEXA, I'm sorry, if DEX and GEX, oh, sorry, I'm hearing myself twice.
Yeah, I'm hearing everything you say twice too.
I am too.
All right, I think that's better. So I don't know, try to shorten my question. Say if I'm sorry, a little nervous. So if I see like big jumps in DEX and GEX where they increase, I think there's a lot more exposure, I guess, interest, and then I'll look like at spot and see if it may have reacted to it yet, based off of like levels that I look at by the Greeks by strike page. Like I try to find levels of support and resist from there. And then as spot during the day kind of gets closer to like say a support or something, maybe I want to do like a bull put spread or something like that. So sometimes I'll look at the volatility page and look. So if I'm kind of bullish on it, I figure I should probably not necessarily always, but maybe consider it if like looking at maybe 10, 30, not really 60 or 90, usually 10 or 30. I try to stick to. But like if IV is higher than HV, that generally tends to be like more bullish for a regular stock, right?
If IV
Um,
is greater than HV,
Yeah, currently bullish, usually.
yeah, currently
yeah, right
bullish. So
now,
like
yeah.
so I'll look at maybe spreads for maybe 10 or 30 day um based off of that. Like if 30-day IV is higher than way higher than 30-day HV, you know, because like even though I'll probably take profit way early because I just very conservative like that, but um so I might not even need 30 days or whatever. But so does that I guess the higher IV make any difference as far as what I'm doing? Or I don't know. Does that make sense?
Yes. Okay. So there's a funny thing that IV does with spreads. So one of the things you're always trying to do with a spread is you want the option you sell to be a lot more expensive than the option you buy. But you also want to be far enough out of the money that you don't have a high probability of getting screwed. And so those two things are kind of at odds to each other because of the shape of the gamma curve. So if you think about like a normal distribution, the slope of that curve, it drops off very substantially closer to spot, and then like the tail is pretty shallow. So once you're in the tail, um, the cost of the sold leg and the bought leg are really close together, and that's when you're like picking up pennies in front of a train because you're basically getting like no reward and you're taking on at least $500 of risk or whatever. um so how does that spread change with IV, I think, is what you're asking, really. And if that is what you're asking, typically a higher IV will allow you to sell farther out, but the difference in the bought and sold leg are going to be smaller. And so you are kind of playing, if you are in a situation where you have higher IV, you might be if you think that IV is going to drop going forward, you might be willing to take less on the difference between those two and credit, knowing that you'll be able to close it later because both of them will be worthless pretty soon. So in general, there is a dance there. I mean, the biggest effect by far, though, is just how far away from spot are you able to actually trade these spreads. And the higher IV is, the higher away you'll be able to trade them for non-zero amounts of money.
Mm.
Yeah, I mean, so they're not very wide spreads, and I usually will use like whatever the support I think it is as like the break even, because I'm trying to play like the bounce off of the support, I guess, and so it's not like I have like very wide spreads. I don't know. I I guess I'm just trying to understand if me looking at the IV at different uh, DTEs and like the IV, like if I was if a spot of a stock was going towards like a resist or something like that, then I would look for the inverse where like
Yeah, so it's tricky though if you're trying to play a bounce. It's always really tricky because you are going to get, if you're trying to sell something out of the money and you're pretty confident it's going to bounce and the market kind of agrees with you, they're going to price that in. And so you're going to be able to pick up only a little bit of premium
Well,
from
I'm just
selling
saying, does
that.
it make it more profitable? Does it make it more costly? And that, like, it doesn't, um, like, should it be factored in? It doesn't matter. I guess it seems like it's negligible.
So if you really want to like capture a lot of premium and limit your risk and you are expecting a strong bounce, actually selling the contract at the money and then
Or
buying
in the
something,
money.
yeah, and then buying something out of the money can give you a huge, because then, you know, if you're able to capture, you know, $300 of credit and your max risk then is only $200 if the spread is, you know, $5, right? So now you've changed the scenario versus if you're trying to sell something out of the money when IV is high and, you know, the cost
Right.
between the different strikes is really low out of the money because of the way that the gamma curve is shaped. Then maybe you're getting 50 cents, but you're risking 450 and you have high IV. So if it doesn't bounce, you get fucked, right? And you get fucked really hard. And it's just like, why did I even want to pick that up? It was so risky and I got so little in return. You're basically just exposing yourself to mostly risk. So if you really think it's going to bounce strongly, it's probably better to just
Go in the money ish.
go, yeah, it's like sell in the money or at the money and then buy out of the
Yeah,
money. Or
a
just
lot
go
of
long,
times
right?
I've been kind of working a daily system like where I'll try to review like the updates and some of them I'll find and I'm like by pre-market they're already at the expected move or you know and I'm like well damn and but uh okay yeah I get that so I guess it's not as important for doing it the way that I'm doing it versus if I try to treat it like out of the money. And like, I think the kind of inverse where if it's bullish, I'm looking for lower IV because I think it's going to go up and something like that, right? Yeah, that was the only like, I guess you could call that a prepared question I had. So,
I'll say this:
uh,
when you're trying to play the sell side of options, there's obviously a lot of incentive to target, you know, alpha in IV, but spreads are a notoriously difficult way to do that. You generally have to make the spreads really wide in order to capture, you know, vol crush or spikes in volatility, because kind of what Jay Fresh is telling you about how the further out of the money they are, the more similarly they're priced. So the less spread there is, but you can also take advantage of that by widening the spread, and that you still retain some upside protection or drawdown protection, but you're far more exposed to volatility because the shift in the smile, if volatility declines, is going to favor, you know, the near the money contract more and the out of the money contract, and so you'll have more exposure over the whole spread.
so wider exposure or wider spread has like
Increased
more exposure
volatility.
to
Yeah,
IV.
the narrower the spread, the less exposed to volatility it is.
Yeah.
So if you saw like a 5 wide spread on SPX, you're really just exposed to like theta and delta. Like you're not really capturing any volatility there. But say we dropped to, you know, I don't even want to say this, but because someone will like buy a put. But say we dropped to like 6,200 tomorrow, found strong support, and you wanted to capture the, you know, the implied vol. You could like open. You wanted to capture the implied vol on a bounce. You could, or on the call side, you could open like a debit spread that was like 50 wide, and you would capture like a whole bunch of the shift in volatility off of something like that, or like a bull put spread, because puts are going to be so highly priced, and the wider
Yeah,
you
but
sell that, the faster the nearer the money contract will decay if the price bounces.
Yeah, so I think probably the answer is for spread trading, volatility is not as big of an issue or as big of a factor, and that's kind of the nice thing about.
Well, that's kind of why I like the spreads, because one thing, if you buy like a call or a put, like you always get like it won't happen fast enough, or IV will shift real hard, and you'll just get screwed, and you'll just sit there holding it, and so it's like this. I'd
Yeah.
rather have like I know what the max loss is kind of thing, and like it just gives me different. I don't know. I don't want to say confidence, but I can digest it easier. But
It's
um,
it's different because with the long position you're waiting for a move to happen, and with the sold position you're expecting a certain move not to happen. So it's a little different. Yeah.
well, not only that, but like if you sell, like let's say you're just selling puts or something, you can wait out all that theta, and then all of a sudden IV pops, and then you're just you know it'll theta doesn't matter nearly as much. Um, but I just noticed with with the spreads, yeah, it kind of negates theta and IV a little bit better.
Yeah,
Maybe not.
it does.
So I like that. Uh, so I guess the reason why a lot of my spreads aren't very wide are because I don't look at, like, I'm not trading SPX or even SPY or anything like that. Like, um, because I kind of don't, like, I have the predefined risk. I don't really care sometimes looking at some, I don't know, some AI, probably fucking shell company or something. But, if I see big movement, I know that'll probably burn my ass, but like, I don't know. I just kind of, I don't even, I stumble upon the stock, but it doesn't really matter. It's more of just like the shifts and a lot of the exposure. I notice I notice like predictable reactions from uh looking, or kind of looking always at decks and the decks, and then especially decks like if it's positive while it's increasing. um all right, yeah, I guess that was my only question. I don't know. I don't really like I don't know. My questions are more like, I'm doing this thing, and sometimes I'm like, I don't know if I'm really getting anything out of this, or if I think I'm getting too much or not, or you know what I mean. So that's what I try to ask you. But all right, guys, I'm gonna take you more time.
Well,
Appreciate it.
well, hold on. Is there something you're doing that you don't get?
Well, like I guess like in this instance, if I were just buy a call, uh,
Okay.
just because
Stocks go up.
or let me think of this. I guess I just like I'm thinking of IV, how I would think of it, like how it's gonna treat spot. Um, so it gives me like a maybe a direction on the DTE on the contracts I'm doing for the spread. Because if I see like a 10 or the 30, one higher than the other, or whatever,
Here, let's play a
So I'm
game.
like, well, what's that?
Let's play a game. Here's Apple, right?
Okay.
Can you see it?
Yeah. Let me one. Okay. I'm sorry. I can hear you now. I wasn't
Okay,
hearing you.
no worries.
Okay. I'm sorry. Shit.
I gotta drop to go make dinner.
What the fuck? All right. Make it quick.
Fucking 7. It's fucking 7. Later, guys.
Later. Who eats dinner at 7? He's like a 20-year-old man. Bitch, I made dinner at 4.
I don't know if you were waiting for me, but good.
Whenever you're good.
Yeah, I'm good.
Okay, so you got Apple here. You're working sell side, right? You got a bunch of data in front of you. Walk me through what you're gonna do here.
All right. So I'm
Don't give
really
away your
gonna,
secrets.
all right.
What?
He's gonna front run you.
I'm not.
Don't give away your secrets. He's gonna front run you.
So first, like, I don't even, all right. So first thing I look at, no matter what, like, I don't even think of it trade wise. I just kind of look at it like, what's going on or what happened or whatever.
Yeah. Okay.
Because I'll look at like the bottom section where Dex and Gex are,
All right.
and I'll look if the purple one goes down and the blue one's going up. I'm thinking that could be, there's more, I guess, more interest, more exposure, and then I'll look at the DEXA and see if it's negative going positive or if it's positive staying positive or whatever. So if it's positive, I'm like, all right, well, I don't know. I think that's bullish. Like I feel like bullish interest or whatever. More, I don't know. So then I'll go to like the well, then also I'll look at Gamma Max, and like if Gamma Max is getting closer to spot, I think that can be a sign of bullishness. With all those other things if they're going on too, but if it's going away, and especially if DEXA is negative, then it's probably bearish slightly.
Okay.
And then I'll go to the volatility page.
All right. Well, no. Let's stay here for now.
Okay.
Okay. So you're looking for DEXA going up, right? So what's that telling you?
So right now it's negative. If it's going up, then I guess it was going from more of a sold side to maybe a bought. Like
Yeah. The delta is being increasingly bought. And then what's the delta, the total DEX telling you?
like the actual DEX. So it's, I mean, net, it's always negative, but if it's more negative,
There's more exposure.
yeah, it's more exposure.
Now, when you look at this one, you gotta kind of also look at this.
Mm.
And the reason being is that, delta is not only being added because of increased interest, which is happening, right? Because, there's obviously a shift in IV that's causing DEXA to move up. But also that options are going in the money because the price of the stock is rising. And so as the price of the stock continually goes in one direction, you will see delta increase. You'll see that happen on downside moves too. Like if you look here, like it sold off hard, but like delta started to go up from the bottom, right?
Yeah.
And that's because those puts are going in the money. And they have delta too, although there are generally far fewer puts than calls on the chain, especially on an individual stock like this. But yeah, so that's telling you that, and then this is telling you that the market maker is becoming more supportive of price action. But also that has limits, so it's limited to a degree by the amount of exposure. So you can only get so much exposure before the market maker selling into the upside starts to stop the upside. So something you are looking at that's really good is Gamma Max, and that is coming down, right? And so you start to like build a list of all of this, right?
Yeah.
Gamma Max is coming down, so that's telling you, obviously there's Gamma being moved that's moving in above spot. And that's pulling the max point down towards spot, which you're correct is usually bullish. Not always, but usually. Like you can see that reversal here, when out of the money stuff starts coming in, GM falls after rising away from spot where it got bearish. And that's because, here people are selling the calls out of the money, right? And you see that here in the DEXA. Here, people are buying the calls out of the money, and you see that here in the DEXA, right? And so, and then you're seeing the effect of that, on Gamma Max and where the Gamma Max is. So you know that people are still buying out of the money because Gamma Max is still pulling down. You know that delta is being increasingly bought. Total exposure is up, so the market maker is becoming more supportive, and that Gamma is getting quite high, but still also moving up. And so that tells you, that the market maker's not only very supportive of the current market, but is likely to be for a little while longer, before, the positioning becomes overwhelmed. You also have your GN is moving towards spot, and DN is moving towards spot. And these are a little more bearish, generally. Like as you see these start to climb, you'll usually see price start to break down because of that effect of the market maker selling into rising Gamma on the upside. But you know where that tops out, and that's at Gamma Max. So you can do a few things here with that information, and this is how you use. You don't really need to worry about VN, but this is how you use this information to build a trade. Right, is first, kind of figure out the narrative of what's going on, like do your analysis, which is, less important for intraday trading, but this is really important if you're on sell side, because sell side benefits a lot from having, theta. So maybe, you think this all kind of points to the stock moving up in the short term. And then stalling out or getting rejected.
Yeah, it didn't look. I mean, I gotta check it again. It didn't look like there was a ton of room, but I was right about it. Like I thought it was gonna be up. Actually, made a little bit off of the spread off of Apple today. But like, as soon as it goes green, I'm like, I don't even give shit. Like,
so
I'm really bad at that. I'm really bad at that. But
well, here, hold on. I'm gonna try to help with that.
we ended up like $2 more dollars. It's just like whatever.
So we've built off of the information that we have just on this page. We've built this, right? It looks like things are still bullish in the short term. And then it's probably going to top out soon, but not yet. Right? And then we can go to Greeks by strike, and we can kind of look at where things are most likely to top out. And you can see right here at like 235,
Yeah.
between here and here, there's just a ton of gamma, and then gamma kind of falls off. Oh shit. And then you have some support to the downside. Here at, I think that's 230. But then you're also going to want to, go over here and look at your delta. And delta falls off really hard around 240. It drops into that like 247 range, which would be fairly difficult to get over. Not impossible, and really like 250. So let's say like 240. So we got 230 support. Gamma tops out around 235, 240, and delta tops out around 240, 250. Okay. Now, if there's not a lot of gamma to support a continuous move up, then there won't be a lot of change in delta, so the delta will matter a little bit less. And then you can look at your like implied volatilities, right? And you can look at 10-day or 30-day IV is still a little lower than historic vol, but 10-day IV is way higher. So that tells you, maybe a window of time between 10 and like 30 days, which would be more ideal to sell volatility in. Because over time, you would expect, the implied volatility to move down more into the historic range. And so now you have a time window. And you have upside targets, and you have downside supports, right? And then you can go and like start to like construct a trade.
Yeah.
Right? With that information, it's probably going to go up in the short term. And so maybe you want to sell like a bull spread, because you do think it's going to go up a little, and there's support at 20, right? So you could sell this, and maybe you sell this for like 5 days out or something, right? And then, there's going to be probably resistance at 240 or 250, and because of where, gamma max is, right around 240, you're probably not going to assume that things are going to go much above that. So then you could sell the call like 240, and then sell a spread like that, and then move this further out. So you can move this to like the OPEX expiration, where you need a little bit.
That many legs. Yeah, at all.
And then what this should capture, right? And then like if it moves up, you can close the put, and then you can sell more calls. Right? Because the premium on these will increase as they get closer to spot. And then if, it moves down, you can close the calls and, maybe exit the puts. But in the scenario you've outlined with the information you have, this would capture what you expect the stock to do, which is find support at 230, continue to move up, and then find resistance at 240. And this would give you, this would expire here, and this would expire here, and then you plus capture profit on both of those over time. You see what I'm saying?
Yeah, no, yeah, it's actually pretty awesome. I just I don't know, my mind just finally started doing 2 legs with options instead of 1.
Okay, well, I mean, you could just sell one option here. You can do things like you could wait for that test that you expect to the upside at 240, and then sell the spread then and see if conditions have changed, which would make the out of the money spread or the further out of the money spread you're selling better. Or, you could just use that support as the basis for selling your bear spread.
Yeah, no, I think that's really useful because there's just some stocks that I think that like the support or the resist are so obvious, and there's only a few or whatever. And I don't know. I'm sure with like a strategy, just like what you did, I don't know if there would be enough liquidity, but
So Girk, if I'm on a limited budget, should I allocate my money to Gammastrike or the other thing you were using?
What? This is free to do that, so
actually, so I
I'm
use
just
option strat and Fidelity will tell you the thing that option strat makes you pay for. I mean, I'm sure option
most
does a lot.
brokers have that as a built-in feature nowadays.
It's like the probability, right? So that's because on the Poor's version of option strat, they don't tell you the the chance of profit. Well, amongst other features, but on Fidelity, it'll tell you it. But on
You
Fidelity,
have
I
so
know.
much work to do to make all these obsolete, so you just need one place to go.
Yeah.
I mean, like I've been honestly so I've been paper trading. I've been actually trading it off of what I've been doing, especially since I've been fooling with spreads. And I've been having good I've been matching my expectations with it. Yeah.
Good.
But all right. Well,
I'm just
that was
trying
really
to
helpful.
I'm just trying to help you use the information you're looking at to find the value you're looking for.
Well,
That's good.
so you had Trading View, but I don't know, with Gammastrike, I feel like you can do something the next day based off of it, the information, or at least I have been, and I feel like I don't, usually people will just tell you a stock or something like that. Like I love finding something and then being like, all right, I think this is kind of gonna happen, whatever, and it happens and stuff, and it just makes I don't know, feels cool, and it's just
That's why
finally.
paper trading is so important, is building up that confidence in
Well,
your
because
thesis.
but the confidence is kind of brings another thing, the nervousness. Because now I'm like, all right, am I just smoking my own shit? But I'm gonna get trash. Would I actually do it? But no, it's pretty cool. I honestly I know when you guys announced it, you didn't get great reception, but I think it's just because it's overwhelming to spectate. But the the grid or whatever you did, because I don't know.
This thing?
Yeah, I'm like, man, I don't I'm not gonna be I'm gonna be honest. I would subscribe to the live service if I was gonna trade. I don't know. I could at my job day trade like that, but I don't know. Plus I don't really want to do. I don't know. I feel like that's way more gambling feeling than doing what I'm doing now. So
I mean, it is.
I'm hoping
It's
this
much
feature lands
higher risk, higher reward.
Yeah, it is. It is. But I'm fucking terrible at it, so I shouldn't try it.
That's
Yeah,
fine.
and honestly, I mean the live trading, it really is at this point, at least what we built, much more niche than the base, the end of day stuff. So, I mean, to me, the end of day gets you most of the stuff. It's just the live trading that what it provides is technically and computationally probably larger than all of the end of day stuff, but um yeah, I wouldn't feel lesser than because you bought the end of day package.
Well, no, I'm
That's
not.
I mean, you don't trade if you don't trade during the day, you don't need it.
Yeah,
That's what
I
I'm saying.
mean, that's really like how we've tried to build this from the beginning is that, you know, you don't have to feel pressured to buy like a higher tier if it just has nothing to do with how you trade.
Well, I hope this stays a tool because I hope it's included with the overnight. And I feel like
Yeah,
this
no,
is a
this
big
this this is this is
This
part
will
of the
be
overnight.
overnight.
Yeah.
Yeah.
cool. Yeah, because honestly, like this month, like I switched in between the 69 and the 129 because I'm like I got to see if it gives me the value for it. And so right now, this month I have it, and I've actually I use the exposure scanner a lot, and so
It's a good one. It's one of my
it's
favorites.
nice. It's nice to find something from like for my findings, and then find it on the G scan. I'm like, all right, cool. Like, you know, I don't know, maybe it's confirmation or bias confirmation.
No, it's
whatever.
not. It's not necessarily confirmation bias. It's just you're just coalescing data points that agree independently, which is good.
Well, yeah, it just builds on the confidence I was talking about. But like,
No.
you know, when you
You're
see
just
something,
arbitrarily seeking out data that supports your preconceived notion. It's fine. I'm
Yeah.
kidding.
but
You-
no, that's cool.
No. I was gonna tell Popcorn that you can in fact trade at night, but he has his own
Yeah, you
laws
can.
that he follows.
Oh, yeah, but like, what did liquidity suck and your spreads, like the spreads would be bad or something? Like, are you talking about like how the pre-market always like gets all the action?
You can trade. There's a product to trade at any time of the day or night if you're degenerate enough.
Yeah, but there's enough degenerates to make it like so you're not getting.
Yeah, you're not. I mean, you can trade like ES, and I wouldn't trade NQ at night, but like you can trade ES and MES at night. You can trade oil at night. Those all stay pretty
Yeah,
liquid 24/7. You
yeah.
can trade
I mean,
SPX at night, but it's weird.
no, I'm you know I'm far from that. Maybe it's something I should be doing, but you know, um,
Not necessarily.
You could. They have live poultry futures gorilla mode, so you could trade cock at night. No homo, of course. I thought he was just trying to make a market for it. Well, I hope that helps you out, She's.
yeah, it really does. I'm glad. I really like it when you kind of map it out with Gammastrike because it, you know, um,
Yeah, a lot of people like it when I like wake up before market open and do the pickles picks live.
yeah.
Like if
Well,
I'm
because
feeling like shit the night
yeah,
before or something.
Yeah.
you
It's
see
almost
it,
like we built this service for traders.
Yeah.
yeah. But I think a lot of people are just they know the value's there. It's just they have to have that moment and stuff like that, and it's just
That's why I
you
sit up
constantly,
here and explain the same
yeah, you
thing
constantly nurture that because
a
it's
thousand
there.
different
And
ways.
definitely, I totally believe it. You know, it's just you gotta, find that. So.
You
Your
got to get to the
Yeah.
point where you kind of feel the data.
yeah, your guys' job
Sounds
is
silly,
to
but
your guys' job is to learn it. My job is to answer your question as many different ways as I can think of until one of them clicks.
yeah, teaching it is difficult, and that's honestly the most frustrating part of teaching is not getting feedback from people who are afraid to give it. It's just like I didn't understand what you just said. They're afraid to say that, but that is the most useful feedback that anyone teaching anything can receive is I don't understand what you're saying.
Yeah.
And that's like because the person asking the question thinks in their mind, I'm an idiot. I'm too stupid. I should be understanding what they're saying, but I don't. So I'm dumb and I should just crawl back under my rock. But what's really happening is the person who I'm paying for the service and the data is not doing a good job understanding it to me where I am now. and I need to advocate for myself and ask for the value that I've paid for. That's a very different rationality, and then you can be like, well, what you said doesn't make sense. And then you can actually put them on their back foot and be like, oh, I need you to do a better job explaining what I'm talking about.
Yeah, well, it's awesome that you guys feel, that you're willing to do that, because I'm sure it's frustrating as hell. I mean, the mustard line, I don't know how many times
Nope.
Kurt's been asked about,
I love it.
but yeah,
I wouldn't have done this shit every day for 4 years, answering basically just hundreds of questions a day if I didn't enjoy it.
Yeah, I think
because every once in a while, one of you fucks actually makes some money and gets the hang of it, and that's worth it.
Yeah, no, it is awesome. Some people just, I don't know. I don't make big wild bets anymore. I don't know, so I don't make big outcomes. But it's the whole other topic. But yeah, I totally believe what you guys are doing. I know sometimes I break your guys' balls. No, I don't really talk a lot, but I don't know. I think
Do your worst, man. I mean, if we can't take it, then we're not worth it.
yeah, well, I don't believe it helps anybody to just be a yes man and stuff like that. And I know you guys care, so sometimes might come off a
All
little
right.
thick.
Well, enough virtue signaling. Does anybody else have a question?
Yeah, I'm gonna.
As much as we all love to sit around and talk about how great we are philosophically, let's what's the value in me not remember gamma or delta or basic grammar? Need to, you know what? I got roped into writing a textbook chapter on something, so the glossary's gonna wait for a little bit.
What about the super green
green
square? Oh, this?
It means people are buying options. It happens every day.
Yeah. The put OI went up 261 contracts, and the call OI went up 8,000 contracts at the 237.50 strike.
I know, need to. How do people buy puts?
With their broker. That they're betting it go there? They could be. Yeah, they could be.
They're either betting it goes there or they're betting it doesn't go there.
Yeah,
Ooh.
and then that's what you can use the IV smile for. Oh wait, hold on. What day was that? It's this Friday's expiry. So you can go to the IV smile and you can look at tomorrow's expiry, and you can look at the IV of the 237 strike.
Yeah, it looks like they're betting it doesn't go there.
Kind of looks like IV is pretty elevated above 235.
Well, you think it could be like a spread situation?
Could be, but I don't see like matching OI there. Maybe a calendar, like short tomorrow, long the 45 there. Those are more similar.
There's a million different ways we could misinterpret that data. Love it.
Fuck yeah, there are. That's what makes it great data.
Be careful. Yeah. Yeah, it's hard to say whether that person is betting on it moving up or not. My guess is probably not, if I had to guess.
I don't know. They look like
just because I mean the IV like is a little bit
zero DTE out of the money calls.
Yeah, I mean it looks like IV is subdued on the call side relative to the put side. I don't think there's all that many people betting for it to go up. I mean, what percent would that even be? 240 divided by 232. I don't think many people are betting for it to go up 1% in one day, but maybe they are.
Is
I
it
mean,
worth?
weirder things have happened in mega cap tech lately.
You guys kept doing these? I thought you only did a few at the beginning. 32 of these is insane. Is it worth rewatching prior ones? Yeah. Have you asked about when
I mean,
puts don't cost same like shares several times?
so it can be worth it to watch some of the older ones, but it's also going to be a lot faster for you to get the information you're after to just fucking ask us a question.
This is true. Speaking of which, there are no currently raised hands.
I will baby farm this shit right now.
Oh, there we go.
Nice. I was just gonna say my son got the sequel to shit, I forgot the name of the book. It's like a book where it's like a whodunit with like a dead panda. It's really cool. He got the sequel with a koala, and we're going through that. So when I'm done here, we're hitting chapter 4.
That sounds sick.
What you got? Watts. Also, what is your PFP? Is it the Five Nights at Freddy's bear in a walker?
I think so.
Or no, that looks like Lumpy Space Princess if she was a grandpa.
You know what I've been doing? I've been using Gammastrike to place intraday trades, and then I just post those trades in my degenerate vibe trading platform channel, and then just watch chaos ensue.
Oh.
It's really fun. And they're pigeon whales, so I don't have to worry about them blowing up, because they're clearly already wealthy.
I don't know. Wasn't Farmville a pigeon whale for a while?
Farmville was a pigeon whale for like 2 years, but that was while he was blowing up all his money. Now he still blows up his money, but as a billionaire.
Isn't the mustard line fake?
Yeah, it doesn't do
Are we talking
anything.
about the mustard line that shows up on the intraday data?
Yeah, people treat it like it's like a VWAP line, but they don't realize that it doesn't.
It is not. It is absolutely not a VWAP line.
It's just a floating
it's also,
point.
I think, not correct.
Yeah, no, the calculation is not correct.
Yeah, well, if it's working for you, I guess don't change it.
I think she's trying to get her. No, I think she's trying to get her microphone working. If there's one thing I know about B Watts, is she has plenty of questions.
B Watts. It's not Bwats. Hold up. How do you say Bwats?
Watts?
It's like I love hot dogs and Bwats.
It's kind of like one of those words you hear in like South London rap.
Can I say something?
What?
I liked like one person who did South London rap one time, and then like after hearing 3 songs, I realized I'd heard every single South London rap song that had ever been made and will ever be made, and I lost interest.
There's a tutorial video from like years ago on how to write a South London rap song, and it's hysterical, and I can't remember who made it.
No shit. Yeah, I'll have to find it.
But it is.
That's the vibe I got pretty quickly. I was like, this feels very mechanical.
You just have to add a lot of like, and then like with a like at or rat or bap sound at the end. And then yeah.
Yeah, I'm not a huge fan just because it's not that interesting. I mean, I feel like I'm very
It's very
very
stylized.
music forward. Yeah. It's like country, like the thing I think country's fine. It's enjoyable. It's like fun in the right context, but like as a music genre, it is 100% 1000% derivative. And it's just like, oh, they got some things from this and are just taking the most basic version of this style. Anyway, yeah. It can work sometimes. Sometimes like putting a country twang on some some interesting techno music can be fun, but
Pop country sucks ass and should not exist. But then we wouldn't
see that's
have
the thing
Taylor
though. It's like
Swift.
once you try to gatekeep that, it's like you're just an asshole because a lot of people love it and
Hello?
yeah, I mean, oh,
Hello.
hey, what's going on? What's going on,
Hi.
Blocks?
I'm sorry. Yeah, it's Blats because I have children and I'm also that my first name starts with B. It was very stupid. And my little hanging old woman is something from many years ago called Squidbillies.
Oh,
Yeah, I
okay.
remember
Yep.
seeing
I've seen
Squidbillies. I don't know
Squidbillies.
what that is, but
Yeah.
I'm gonna
that's the
pretend
old
it's
grandma.
Lumpy Space Princess from Adventure Time as a grandpa.
Yeah, okay. It's a little bit less peachy than that one. Yeah, thank you. Sorry, technical difficulties.
Australian, not
Embarrassing.
British.
Don't know what
Grackle.
happened.
You troglodyte.
The mother country. Yeah, so thank you. Thanks for letting me back up here again. I do have questions. I heard you say I have lots of questions. I always do have lots of questions.
Got it.
But I found it really I found it really helpful when last week you explained the Gex curve as a way of showing how GN moves up and down. Because I went back. I didn't quite get it at the time, but I went back and I watched it about 5 times, and then I started getting it. And so I was just wondering if I could just chat a bit more about that, and then I have other random questions.
Yeah, of
But,
course.
Again, I don't want to hog your time, but so if you have a look at like NVIDIA again,
Okay.
you were chatting to me about that.
We got it. You want the gamma curve or the Greeks?
Oh, sorry, the Greek
Okay.
neutrals. Yeah, sorry. It's just that I'm kind of visualizing how GN is moving up based on that curve moving around. Like puts the gamma coming positive and negative in different sections and spot moving and like you said, charm and then I've noticed that post earnings there's been this kick up now of gamma neutral and delta neutral, and I'm wondering if my interpretation is correct. It feels like maybe that's to do with the IV crash. Like I was like, that was another factor that I wondered.
So yes,
sort of affected the Gex curve, does it? Yeah.
It does, but maybe not in the way you're thinking. Remember, highly anticipated earnings are going to draw a lot of dispersion, especially on something that makes up 8% of the S&P. And that means prior to the earnings, while implied volatilities are rising, people are trying to capture that move up in implied volatility. So you get a lot of You get a lot of people going long vol into earnings. Right? But then earnings passes, and the dealer has hedged all of this long volatility volume that has come in. And then on the other side of this, volatility is either going to go up because there is a move larger than what is baked in. So, you know, the MM is now priced X move into the options. And then if the stock does this, all of these options were overpriced. They're gonna be worthless because the volatility is going to crush, and then as the premium value of those options out of the money declines, the MM sheds their hedge, so delta generally, and so you see that effect. You even see it here because it's so pronounced.
So Nvidia had a lot of long calls that then dropped off.
Well, they had long volatility positions that then are going to close because none of that implied volatility was realized. Like Nvidia is basically flat on the day almost, which is actually very stereotypical of their earnings lately, and that is because of this effect. So what is happening is so many people are piling into the dispersion there, assuming that Nvidia volatility is going to increase, which it does, into earnings. But then once you get to earnings, which you saw before earnings and also now today, those people want to close those long volatility positions and capture the gains that or the profits that they've made on the increasing volatility before volatility flattens or falls off or crushes. More colloquially.
Okay.
And so, because of that, the MM has all of that delta hedged. So, you know, as the market prices up the demand on the options, the MM has to hedge a wider and wider move, which means carrying more and more delta in their inventory. So they have to stockpile all this delta into their dynamic hedging. And then when volatility crushes, they don't need that delta anymore. So, because the implied range of the stock is now going to narrow, they get to drop all of that delta that they picked up. So they get to drop the delta of the delta.
So if you dumb it down even further, dumping is like it's not selling. You're not talking about selling the stock.
Yeah,
you're not
no,
talking
I
about
am.
like literally selling the underlying.
I'm literally talking about selling the underlying. Okay. Yeah.
But then,
I mean, when you're talking about an
so
MM and you're saying that they're picking up delta or dropping delta, this is literally just buying and selling the underlying.
Okay. But then why does that make gamma neutral pick up? Like that's the bit where I like
because
my brain.
Oh, well, because gamma's part of that. So if they're using, you know, say someone's, you know, buying the call and then in response the MM is, you know, selling a put, then, you know, as they collapse those positions on the chain that they've used to dynamically hedge, gamma is going to fall off in line with delta because those positions are closing.
Oh, I didn't realize that the MM bought puts.
Yeah. I mean, and
I thought they only hedged the underlying.
Well, when you're dealing with like ES and SPX, you actually get a lot of dealer activity on ES from SPX, and so they're kind of conjoined. Because like ES represents one of each of the underlying stocks in SPX, and at the forward price of that. And so this is almost just like raw delta. And they can use that to hedge SPX contracts. But they also use contracts to hedge SPX. Like only like the really big dealers are using futures heavily. Most dealers are you know, just selling, they're boxing whatever you buy, basically.
Oh wow. Okay.
Yeah.
So that, yeah, okay. It's complicated to try and unwind then in terms of positioning.
It can be.
With NVIDIA, do they do well for me, maybe not for you. But where you just went to SPX and ES, does that also happen on equities?
Yeah,
Like,
it does. Except on equities,
Yeah.
they are using the underlying, because the underlying is that pure delta, right? But they also use options.
Okay. Yeah, okay. So
And
that's
in
the factor that I
equities,
wasn't getting.
dealers have significantly more influence over the price of the underlying than they do on something as large as SPX. And the reason for this is that these are smaller markets. They are less liquid and risk is lower. And so for an this is, I think, you know, largely where they draw their profits. Because, you know, on NVIDIA, they can price up the out of the money call and raise it enough that they can get call sellers to come in. And that can force the price of the stock down, right? Because they've now made that call really attractive to sell because it's more money. And, you know, the environment is less liquid, which means there's a more drastic change in price for volume traded. And they have significantly less risk in doing this on something like NVIDIA or GME or Apple than they would on SPX, where if they got blown up for making that move, they could lose hundreds of millions of dollars in a few minutes. On something like this, they can just keep pricing that option up till it almost goes in the money, and then hope that the market just reacts the way they want the market to. And in this way, MMs are, you know, legally tasked with dampening volatility. This is their directive. It's what they do. And the way they do that is by incentivizing the underlying market. And sometimes their incentive is so strong that they're in fact manipulating the market that they're supposed to be neutral in anyway. And that's why some of this data is so important.
Thank you. I don't have anywhere to be this week, so don't let me hug the stage or anything, but I'll just keep going until.
No, keep going. Don't stop.
Welcome, though.
No one else has their hand up.
Okay.
Don't be embarrassed. It's okay.
Okay. Well, last week you went through. I really enjoyed actually the example that you went through with Old Sheezy. That was just awesome. I plan to watch that a few times. That's the sort of thing where I think, even though I'm starting to get it, the process from start to finish is still difficult. Like I can go, oh, I get it if you explain it, or oh, I get it if someone else explains it. But then like what you just that example you just went through all the way from the start. That's the bit where, yeah, I'd love to get to. So I was looking at NVIDIA again. You were using that as an example last week, is that everyone's selling the calls, and then I noticed back in just screen's a little small. Back in like the period of June, it also flattened out Gamma Max, like back in June of this year. And then I was like, well, if you were doing the same thing, thinking about selling calls because it looks like it was capping out and everyone just kind of didn't think it was going to get any higher back then than about 150. Yeah, there. Was there anything at the time that the neutrals, just for this page, maybe it would be elsewhere, or maybe you can hint at where it might have been, that would have hinted that it was going to actually break up and just keep going up and Gamma Max keep trending with it? Or is that a case of, well, that's where it's still a good trade, but that's where your risk management should save you?
Yeah, it's still a good trade. And again, if you were making that trade, like I kind of pointed out earlier, I don't know if you were around, but you do want to try to define the time frames on your trade. This would have been a phenomenal trade for 18 days. So quite a lot of time that you could have been in that trade or in and out of that trade. But yes, I would say that this was a news related shift. This had to do with the unblocking of the Chinese chips, which is now, obviously a closed proposition. So we'll see how that changes things. But there are going to be like news related events that occur that change the sentiment and the underlying. And you do see the sentiment change here, which is where you would probably want to bail, because now you have even here where you have like these first 2 days where you have spot rising, like you're breaking out above Gamma Max and spot is closing above it repeatedly. That's a very strong signal that like things are probably still going to continue up. But depending on where you were selling back here and for how long you were selling back there, you would have either already been profitable and hit your stop, or your risk management should have stopped you there, because obviously the incentive is to sell in that range, as it is here. But here we have something a little different, right? We have Gamma Max going up, but spot's not following suit. And that's a little bit more bearish, because now people are trying to capture yield out of the money on calls. And they're pushing the Gamma Max up, but spot is not tracking.
And note how gamma neutral, or delta neutral, sorry, is scoochieing up. Yeah, gamma neutral too. Gexa spiked a little bit. Dexa spiked a little bit. Yeah, this is interesting. I think people are just getting a little bit, maybe they kind of want to hedge their bets. Folks who are up 1,000,000% on their NVIDIA.
Yeah, but does Gexa diving down, does that mean that the calls are being bought rather than sold?
No. That means that the botness of options on the chain is increasing. So that Dexa, that spike up in Dexa, means that options are being bought. And since we know earnings was yesterday, and we know people were probably shorting vol into earnings, right? So remember, everybody goes long vol into earnings, and then at earnings, everyone shorts vol because crush. So this is like the trade I posted last night or like yesterday before close in the Vibe trade, the butterfly. Did you see that?
I didn't see an NVIDIA butterfly.
Yeah, so
there was a before. I thought that was
it was last night.
I did not.
Well, end of trading day yesterday.
Damn it.
It's there. You can go click on it and look at it. It's still in the channel. But like
Yeah.
basically what I did was I sold a at the money iron fly, one D, like the or I guess it was the 2 DTE last night. And then it had like wide legs, so it was like 65, I think 200, something like that, with 182.50 at the center strike. And I then like closed that this morning for like 43%, because basically what I did was I just sold the fuck out of the volatility on both sides of spot. And so when we opened today relatively flat, all that volatility, all of that pricing for that 6% move was gone. And so I could buy back those options for significantly less money than I sold them for.
Oh,
And
yeah. No, I did see that trade. It is, yeah.
Yeah, so that tracks with how market participants behave with highly anticipated earnings, right? They long vol into, short vol out of.
Yep. It has to do with pricing in uncertainty and then pricing out uncertainty.
Yeah, okay. And what does the GEXA, maybe I'm confusing what GEXA going down means. That means
The
doesn't
soldness,
mean that
the
they're more-
soldness of options is increasing.
Yeah, okay. Yeah, okay. Yeah, I did have that back.
So sometimes you'll see like, here's a good example. If you look right here, you see gamma max moving up and away from spot, which indicates that kind of out of the money call selling that we were talking about. And then you can kind of confirm that down here with DEXA dropping, because calls are being sold. And so the soldness of options is increasing. And then, here, that's a signal I would also look for. So like once all those sold options are bought back, if you start to see this decline again, but then gamma max continues to move away from spot, it's probably a pretty good indication that the stock's going to come down, or at least not go up.
Yeah.
Which is why spread selling around gamma max is so advantageous.
Okay, so I'm a little bit, I'm always confused, let's be honest. But I will rewatch that. But can I just go through then that period that Jay Fresh said previously with Apple, late 2024?
Yeah.
Because I took the negative GEXA then. I thought that it was negative for the MM because the MM is selling options.
Which, do you know what dates?
You're saying negative. Oh, sorry, late 2024, like November, late November through to late December.
Okay.
So see how like GEX is negative there? I thought that was negative because the MM is selling, like as in the MM is selling options, so it's got negative GEX. So that is saying that. So when you're saying bought, maybe I've got to switch up. Yes.
Participants are buying on the chain, which is causing the price of the options to increase out of the money, which is skewing the IV and in turn bringing the skew adjusted IV or skew adjusted delta positive.
Mm-hmm. Yes, but the skew adjusted GEX,
gamma,
that's negative. And when you gamma, sorry,
well, skew adjusted gamma is always going to be negative. That's
it's never positive.
Oh.
Yeah, if it went positive, like the stock is like going to zero.
I think it goes it went positive on Apple in March 2020 when it was literally crashing.
For how long? Yeah, like probably like maybe for a day.
Yeah, not long at all.
Yeah, I'm not even sure did it actually go positive?
It did.
Oh, it did. Yeah.
Little teensy bit.
But these are like 10% intraday sell-offs.
Yeah, no, the market
Yeah.
is literally crashing.
Extremely rare. Like the flash crash back here, like it went positive for a single day. But yeah, that's very abnormal. Abnormal
Yeah,
behavior.
unless, well, okay, so it could be more regular on a stock with a very light option chain.
You mean like
because in that
something that
case-
costs like $2?
Yeah, something that costs $2 with like 100 OI on it. I mean, you might see that more often.
Yeah, but that's just like, I mean,
It's meaningless. That's
yeah.
why. And that's an important thing to note too. Like with Apple, obviously this isn't the case, but with smaller stocks and stuff, I mean, you might end up thinking, oh, Gex up positive, crazy stuff, but like really think about if what you're looking at is just noise or not. Because on a tiny stock, it's probably noise. On something like Apple, it's probably not, but you're probably well aware of what's happening and like why that's happening. Like Liberation Day, I think it went positive. No, it didn't, but it barely almost went positive. You know, but it's very obvious why that's happening.
Yeah, I still so sorry. I still don't understand boughtness. Like I thought that I understood it, but now I realize I just don't understand it.
It just
How
has
can
to
it-
do
why would
it has to do with like
do
out of the money
What?
implied volatility. Basically, is what's the adjustment being made to delta is the out of the money volatility on all options. So if out of the money volatility on the options is going down, those options are being sold. If out of the money volatility is going up, options are being bought. Because demand,
Okay.
supply demand is affecting the
so
price of the
going
options.
pos-
So if everyone hits
so
the
going
market trying to
positive,
sell
like
their
no one
options
has
at
been-
once, the out of the money IVs are going to
Yeah.
crush. Right, and when out of the money IVs crush, then there's not going to be a lot of price action in with any kind of like range, right? Like realized volatility is going to fall, implied volatility is going to drop, stock gets very flat, or it goes the other way and starts dropping, depending on how heavily that's skewed one way or the other, puts or calls, right? And then if out of the money IV is going up, it means there's a lot of demand for out of the money options, and that's either above spot or below spot. That's going to increase the boughtness of options, and then that in turn determines the positiveness or negativeness of skew adjusted delta. If you guys want to comment on that at all and add something to it, you can, but I think that's the simplest way to get it.
Yeah, IV is price.
Yeah, I mean, I'd be willing to blabber on about it if needed, but if that made sense, I agree.
Did it make sense to
think
you?
it
Would you
makes
like
sense.
JFresh to blabber?
I think so.
Don't make the mistake of
JFresh blabber.
You guys.
don't make the
No,
mistake
no.
of confusing all of the options on the chain and total exposure
Yeah.
with puts and calls.
Yeah, my obsession with puts and calls does continue.
If only we knew.
Yeah, it was funny last week. I rewatched the stream, and every time I hit the point where you were like, the neutrals are agnostic to price, I just had flashbacks to the Matrix where he's like, there is no spoon, and I'm like, oh god.
Yeah, well, think about it this way. So
I'll get there eventually.
Let's say you owned like 10,000 calls on a stock, right? And you found out that everybody knows you have 10,000 calls on the stock. What are you going to do with those 10,000 calls right away? You're going to sell them. Like, knowledge is everything in this. So, like, I mean, we're not going to know puts or calls, but we can sort of make inferences about the pricing of the options. So that's what we do.
I mean, let's not undersell ourselves, but yeah.
yeah, I mean, well, if you out of the money, I mean, it's the naive assumption about what people are doing with options out of the money generally holds true. So, we have a pretty good idea, but like if you look at, say, the IV surface for Apple and you see like some spikes on the surface, the ones that are further away from the money, okay, right? Like no one's probably trading call or trading puts that are like, 3% in the money, and no one's trading calls that are 3% in the money either. But when you see those little spikes closer to the money, I mean, those are a little more, unclear as to what's happening. So, it's the game we play, and we try to play it right with you guys to show you sort of the where our assumptions hold best, which is, out of the money a decent ways where pricing's still good, but people are still doing what you would expect them to do if they were rational.
Yeah. Like these
Okay.
puts are interesting.
Those are exactly what I'm talking about.
Yeah. But as are these, right, which are very likely
Yeah,
calls at the very top of the chain. So,
but you see
and
that one
that's
little spike right
that's
there near the money on the same expiry. That one little
this
spike
one.
right near the money. That guy.
Yeah.
Yeah. We don't know.
Someone's
Nobody knows.
I mean, yeah.
Well,
Sure.
I mean, you could guess, but like that's just a guess.
Well,
There's
you
a little
can
dip next
you
to
can
it
you
too,
can go
so-
look at like, because that's the 1 day change, right? So you can kind of like, this is fun to do. You can go and look, and it's like the, what is that, the, like it's
And
around
you
like
can just slide the
2.
smile over to the expiry. Yeah.
That's the 10-3 expiry,
10.
which is a weird one. Anyway, so there shouldn't be a lot of activity there. It's kind of hard to see, but it looks like it's like the 220 strike, right? So you can go down
Is
here.
it 10-3 or is it? I think it's 10-10.
Yeah, it's right there on the 220 strike.
I think it's the 10-10 strike, the 10-10 expiry.
Yeah.
Yeah.
Oh, you know what? Maybe it is. Yeah, it is the 10-10. Yeah, there it is.
There you go.
There it is. That's where they all are. So it's the 10-10 expiry. Yeah. It's yeah. You can. The easiest way to find those is to use the term structure, by the way. But yeah, 10-10 expiry, which you can mouse over like that, and then you can see that little spike in the 220 strike, and then this is the fun shit you can do. You can go over to volume, and then go to 10-10, and look at like the OI changes on the puts and the calls on the 220 strike. Clearly like a bunch of puts, not a lot of calls coming in.
Yeah, there you go.
And then you can look at the OI and see like see those changes here too. So there's that there's the 10-10, almost no OI on the call, but the actually there's like not any OI. Oh, this isn't updated yet, is it?
I don't know. I usually just move I change the date, and then well, it looks like the 10-10 was just open today.
Yeah, so this will be on the morning print for the OI change.
Yeah,
so if you wait
no
till
wonder
after
the IV
6
is
a
right
like
there.
7 a.m. Eastern, you'll see the OI pop up there.
Yeah.
Once the OI is updated for the overnight.
Yeah, it's interesting that chain just got opened today. Yeah,
Ooh, we got some more hands.
I don't know if that necessarily clears things up or muddies the water, but it just goes to show that if you're interested in a stock, I mean, at least for me, a holistic approach, right, where you may see an opportunity on one tool, go examine it on all the other tools and see if that opportunity is like your thoughts on it are reinforced, from the data. It's a good process rather than just saying, "Oh, it's at Gamma Max, time to sell calls." Look at the other data and see if that's really the case.
Yeah. Yeah, I mean, the way we present this data, there's always another layer that you can verify your thesis. So you can really get down to like the nuts and bolts and look at them real close, like we just did there with that little bump in IV that we noticed, right?
Yeah, no, that's awesome. Did you say there were other hands? horror.
Yeah, there's
We
a
got
few,
two.
few
We
more
got
people.
some
Oh, great.
kawaii.
I'll hop down then. Okay, cool.
Well, thank you so much for the
guys.
questions. We'll see you next time.
Thanks. Thank
I
you. Can
think-
you boot me? I'm not
Yeah,
quite
I
sure
can.
how to
I
handle
gotcha. No worries.
We got is that so your username is Kufu Wachino, even though those are characters that I cannot read. If you want us to call you something other than Kufu for short, please let us know. Hello, you're on the air.
Probably just mic issues.
Yeah. Trying to be like C-SPAN.
Chino Kafu? Something like that.
Kafu Wachino, so I guess Kafu would be the shorthand, I would say, or I don't know if that's bad or not. I don't know. I'm uncultured. Maybe they're quiet because I said it wrong.
I'm gonna go with microphone
Probably.
because Discord audio is just weird. If you're using your cell phone,
Yeah.
just slide up from the bottom and you'll get all your audio options and you can like choose your headphones or your fucking speakers or whatever. There you go.
We saw something.
Is it working now?
Yeah.
I can hear you.
Hello.
All
How
right.
you doing?
Hello. Hello. Yeah, you might know me. I'm not sure, guys.
Yeah, you're on the stream. You're on the stream a bunch.
Yeah.
Yeah.
So yeah, I was wondering if I made a good choice here with Nvidia the other day. I
Okay.
saw that Nvidia was nearing Gamma Max,
Mhm.
so I assumed that it would be hard for them to push it up higher. At the same time, it was far away from Gamma Neutral, which meant that the market maker assumedly had a lot of Gamma exposure, meaning
Yep.
that they would most likely dampen any drops when it comes to volatility to the downside.
Yep.
So I
That's
thought the
correct.
best possible thing to do would be to buy short iron condors, since any downside moves would be bought up, and any moves to the upside will be faced with possible drops in delta to the upside after it gets above gamma max. Is that about right?
Yeah.
So when
That's
you're
that's
you're
kind of what I
above
did with the
Gamma
butterfly
Max,
last night.
So when and yeah, no, I mean the results are like the proof is in the pudding here, but when you go above Gamma Max, it's not that delta necessarily drops off. It's just that the rate of change of delta slows down. So that's really the distinction. So that's why there is a ton of resistance at Gamma Max, is because delta is no longer picking up. You could think of it like if there's a bunch of calls that are in the money or at the money, the further you go, as the further they go in the money, the more their delta goes up. But once they're super duper deep in the money, their delta is not going to go up anymore. They're practically guaranteed to close in the money. So that's essentially what Gamma Max represents, on the chain writ large.
Yeah.
Hmm.
And that can
And
skew a little bit with exposure, which is sometimes why we always recommend like going and looking here and looking at not only where gamma max might be, but where exposure peaks. Because even if, gamma tops out here on the contracts or on the like the MM's book, there can still be increased exposure to the upside that, and that's really where you see like breaks of gamma max occur, is when gamma max is not the highest point of exposure on the chain.
Yeah.
And so it's good to always
does that
double
happen
check that.
does that happen when like there's sudden increases in delta
Yes.
That's influence it.
Yeah, that can absolutely.
And the MM is short gamma, but so that means they're short calls and puts, but at that short gamma on the calls and puts is actually long delta on the short puts and short delta on the short calls. Is that how that works?
So the market, well, I mean, you're assuming that, all puts and calls are bought. But yes, when a participant is long a call, the market maker is now automatically short that call. And so they hedge by replicating that call. But yeah, so if participants are net long calls than net short puts, then the market maker is net short delta and also net short gamma.
Okay. Um. All right. All right. Sorry. I have to repeat that. So, like, if they hedge their gamma, I'm assuming they're hedging gamma on both calls and puts, but
Yes.
wouldn't the hedge on the puts kind of be weird since the short puts are technically positive delta?
Yes.
And so how would that work? Like,
Generally,
like
gamma is hedged with delta.
hmm, so there. Oh yeah. So
Almost
like if you
everything
were
is just hedged with delta. With the exception of
so like
Vega. Vega's a little like a bit of an outlier. But yeah, I
Vega's
mean,
hedged with spreads.
yeah, Vega's hedged with spreads. It's also hedged with like vol swaps, which are more risk neutral. But like that's probably not a huge concern here, given like dealer inventory on Nvidia is probably massive, and they don't. I doubt very highly they're worried about their Vega hedge
Well, the
frequently.
ETFs that, I mean, Nvidia's in like a million ETFs, dude. They can get shares whenever they want.
Yeah, yeah. And so generally speaking, delta is how the MM is going to hedge their delta, their gamma, their Vega, all of that.
all right. So would you say generally it'd be advisable not to short at gamma max, but rather to wait for gamma neutral to rise towards price before attempting to
That's
short
yeah,
gamma?
because that would be more bearish. So if you have a stock that's at gamma max, generally the best trade I've found over time is selling theta, like selling the decay of options above GM, not actually shorting. And what you're describing, a scenario where gamma max starts to move up and gamma neutral starts to move up, and the supportive gamma for spot is now declining. So remember that this is this spread here between spot and gamma neutral. This is the positive gamma exposure on the MM. And if this moves up or spot moves down, that exposure decreases. Like notionally.
It might be good. It might be good to illustrate this on the gamma curve.
Yeah, probably. Because it's
the gamma curve perfectly illustrates this.
It's a lot easier to see. Yeah. Hold on, let me pull that up. So
yeah, yeah.
If spot moves up, exposure increases. If spot moves down, exposure decreases. If gamma neutral, well, this isn't really gamma neutral, technically not neutral. I should point that out.
We have to use this. We just need to make the distinction that you have to imagine this like gamma, even though it's not.
Pretend this is gamma neutral, and if this moves up, then the amount of positive exposure decreases. Positive gamma, goes down, and if this moves down, positive gamma goes up.
And that slope of that line starts to, especially if gamma max and gamma neutral are moving up together, the slope of that line stays constant. But if they start tightening up, where you have gamma max being relatively flat and gamma neutral approaching it, or the other way around, gamma max declining and gamma neutral staying flat, that slope of the gamma exposure steepens. That's speed. So you get in a little speedier environment, and that's where your support can change more quickly.
Yeah. Generally
Right.
equals increased realized volatility.
Yeah.
And what could one expect to happen to delta as gamma support falls off?
Well, gamma is just the rate of change in delta. So the higher the gamma exposure, the more, the less of a rate of change in delta. The lower the gamma exposure, the greater the rate of change.
Yeah, I've generally viewed delta like in the more general sense, like delta is just the probability of the price hitting a level. I've just kind of viewed it.
Like
So,
That's correct.
it is.
yeah,
Yeah.
That's how
It's a
options are
CDF,
being
yeah.
priced, basically. Is the market maker is pricing like the 0.2 delta option as having a 20% chance of going in the money.
yeah. Whenever I'm trying to like trade a standard deviation move away from the expected move, I generally just like target the 0.16 delta option for that day,
Okay.
because that's so like just outside of the range.
Yeah.
And sometimes that delta just completely falls off to zero. Most of the time it does, but then when it
Sometimes it
hits,
doesn't.
Yeah.
So that's why I'm like really like somewhat focused on like what other aspects of these
Well, remember when
neutral
when you're looking at all this
develop.
data, this is all of those probabilities aggregated. Because we're taking all of the options on the whole chain and looking at them in aggregate.
Yeah. So if the rate of change in gamma, the rate of change in delta, that's what gamma is.
Yeah.
If that falls off, what does the market maker usually do with the delta? Do they do anything?
Well,
Or
they don't need to carry as much delta.
They don't need to. Well, their delta hedge doesn't change as much, right? So when you think about like gamma exposure, like when there's really high gamma exposure, you know how it acts as like a damping force. But if that gamma exposure gets lower and lower, that damping force gets diminished more and more.
Yeah, and then ranges start to open up. So
Exactly.
when you have low gamma, you get higher realized vol, which then in turn increases IV. So options start to get more expensive. As options start to get more expensive, spreads widen, which loops back, and you kind of get a reflexive effect as gamma continues to decline.
and by low gamma, you mean low supportive gamma
Yeah,
exposure.
lower the
Yeah.
because you're always
Lower
looking at
less positive gamma.
yeah, you're always looking at gamma from a like negative to positive perspective. And so, the lowest point of gamma is in fact negative. And so, but the less exposure there is, the more you're going to see increases in realized volatility, and then you're going to see increases in options prices.
And the options price, the options themselves, the actual gamma of those options will likely increase because the rate of change in delta will increase in those options, right? As the
Yes.
gamma
Yes.
exposure falls. All right.
Yeah, so you could think of that. So you can think of like gamma. I put it in the chat a while back before I made dinner, but gamma. So you know how delta is a proxy for probability of closing in the money. Gamma is a proxy for a probability distribution. So like if the stock took a random walk a million times from this exact point in time forward, a bajillion times, it is anticipated that it would land in a distribution shaped like the, not this gamma curve, but like the option gamma curve, that like bell curve that you see on like the live data.
Yeah,
Um,
that distribution type curve.
Exactly. Yeah, exactly. So when volatility increases, you have to think of, oh, that random walk now can go a lot different directions, so that bell curve is going to widen, right? So that is reflected in all of this.
It
And
kind of
s- the
seems
s-
like the volatility smiles a little bit, how they smirk sometimes.
well,
Yeah.
yeah,
Yeah.
and it's all
I mean,
connected.
yeah, I mean, like you're when you know when those realized vol increases, and then realized like implied vols increase, that now you're dealing with Vana, which is the IV is then affecting the delta, and
Yeah.
in a higher implied volatility environment, options further out of the money have a higher probability, or a higher implied volatility environment, options further out of the money have a higher probability of going in the money.
Yes.
All right, that makes sense. I feel like we could do a lot with just gamma
You can.
and delta
That's why we
alone.
Oh
named it
yeah.
after Gamma.
Yeah. I have a hard time getting my head around Vega though, like the Vega neutral and Vega exposure. Like
It's
sometimes
weird.
I could look at a stock and
So,
Vega, like on MSTR, and Vega's just completely flat, way below every other neutral.
so
And
let
then
me
I
let
look at
me
like
uh
the
let me explain
utility
something about
spot.
Vega, which I've tried to convey a few times. First of all, VN on indexes is not the same as VN on equities. Like, well, the effect of them is not the same. This is very important to remember. But on equities, most stocks, unless they're like going bankrupt or something, the price of the stock, or crashing, the price of the stock is going to be above Vega neutral. On equities, or on indexes rather, you generally, indexes and index tracking ETFs like QQQ, SPY, like that kind of shit. You're gonna deal with you're gonna see Vega neutral above spot usually, with some rare instances like the current one where there's so much gamma on the chain that they're able to leverage up, but um, Vega exposure from the side has a lot more to do with their profit and loss, and a lot less to do with their exposure. Um, and what's interesting about that is we're always looking at exposure, kind of like negative and positive, at least on this platform. Um, but there's also, profit and loss. And that's kind of working off a different axis. And so, as we move above VN on SPX, the becomes less and less profitable, which skews their behavior. So in a positive gamma environment, we always have that fun assumption that the is going to they're going to buy the downtick and sell the uptick. But as their profit and loss becomes more concave, they will start to sell the uptick and the downtick, because they are losing money, as the concavity of their overall positioning gets worse. And so, like, you have, like, between GN and VN, the is selling the uptick, sell, buying the downtick. But as you get more above VN, the MM will start to sell the uptick and the downtick relative to how much total Vega exposure they have. Because the MM would
Are they
prefer,
losing
obviously,
above
for their returns to be convex, which would be in this range.
So are they like losing above VN?
Yeah, yeah, the MM's getting fucked really hard. they're losing a lot of money.
All right, and so all right, so I get it. That makes sense now when I think of it that way. Yeah, and
that also creates a
getting
really
lower.
interesting like intraday price dynamic, and that trends above VN. So if you break out above VN and start pushing up, it's likely to continue because the MM has to actively continue to hedge the upside. But also like breakdowns will snap back to VN because the MM will not hedge the downside. They just won't do anything. They'll let the market behave on its own because they want to return to they're a profitable book.
All right. Yeah, that explains a lot. So I have asked about this a little bit before we've talked about this on stream, but you know, gamma neutral above delta neutral, that's generally more bearish, and I'm guessing because it means that delta will react sooner. Is that why?
Delta neutral above gamma neutral?
Gamma neutral above delta neutral, is that generally more bearish,
That's more bullish.
or is it the other one? Oh, so delta
Yeah.
neutral above gamma neutral is the bearish one.
Yeah, that's nasty.
All right, could you explain a little bit of that?
Because
it
it means that the like the concentration of delta is closer to the money than the higher concentration of gamma. So the change in delta is more reactive to a downside move. We've had to there's a lot of different ways of explaining this, and we've all three of us have molded over a lot because it happens on the intraday and it's super bearish. But basically, yeah, like there's no supportive gamma, and the supportive gamma is further from spot. So there's like more supportive gamma than there is supportive delta. If that makes sense.
So in a way, I could think of it like this: the market maker's neutral delta point has a higher probability of being hit.
Actually, I think their gamma point would have a higher probability of being hit if gamma is below delta.
Yeah, that too. So
and then also that the probability of that continuing to sell off below that is also really high.
So not only will their neutral delta point be higher probability, but their gamma point that's below delta will be higher probability.
Yes. Yeah. Because the spread between delta and spot is narrower than the spread between their 0 point of gamma and spot.
So in other words, I can still think of it like the probability is higher to reach the neutral delta point, and then after it reaches the neutral delta point, the delta of the neutral gamma point will rise too.
Well, the change, the change in delta below the delta flip is going to accelerate as the rest of the gamma falls off.
Yeah.
So
and then as gamma falls off, that'll cause gamma to start to rise even more.
Yep.
On the options contract.
Yeah.
And then that'll just
so then you'll get a situation. Usually when that happens, you get a situation where a spot falls to GF, and then then GF will continue higher and spot will continue to fall. Obviously that could be turned around, so those are good risk levels to watch, but it's really hard to turn that specific price action around.
All right, nice. I think that answers all my questions about the neutrals. I know I've been asking a lot of questions, but there is one more thing I want to go over, if that's okay.
Yeah, that's fine.
All right. I just saw your volatility services. They got released. Uh, and I was looking at like the volatility surface of HPQ, and I noticed that there's like portions of the 3D surface where like kind of the fabric just sort of has indentations on like the uh on the red side, the higher IV, I guess. Can you bring it up real quick?
Yeah.
I have to look at
On which stock?
yeah. HPQ.
HPQ. All right.
Yeah,
Ooh,
there's a lot of little ruffles in it. So
that's a
I
weird
was
one.
wondering if like if it is it like ideal to buy the strike and expiry that has the deepest ruffles, like does that detail like a contract that has lower IV than normal that may be
Expect like so
advantageous to
like
buy?
you're talking about these like in between strikes that haven't seen a rise in volatility yet.
Yeah.
Yeah, there could be an advantage to buying those if IV continues to increase to the downside of spot, because those would obviously benefit as well. They may not, they're probably just not as liquid. So you'll probably find that these are like the OPEX. Like this, what is this bottom of the chain? Fucking, where's the strikes? That's like oh no, that's, yeah, so that's like the 23 put. So it's like down there somewhere, and then that's probably for 919. Yeah, so it's not as high as like maybe some of the other ones around it. Yeah, if you look at the 25 strike, like there, like the 10-3 and the 10-10 expiry, like the 10-10 is significantly higher. So yeah, I mean, and then like also the 9-12 is significantly higher than the 9-19. So yeah, there could be some like arbitrage there. Like if you know all the demand is on these options, right? And then there's not a lot of demand on these because maybe they're illiquid. Demand on these could pick up. So, you know, if you could get a good deal on that option, like, you know, buy it cheap, relative to the options of the expiries around it, you might be able to take advantage of, you know, volatility increasing across all of those contracts. That is
Yeah.
like you're kind of trying to play arbitrage on like the more illiquid options on the chain versus the more liquid options on the chain, and as demand for those options increases, the demand for the illiquid options will probably increase as well, and the spread will at least widen, which is profitable if you're long the option before the spread widens. So it is a form of arbitrage that you can capture, that a retail trader can capture. However, that option, if those options price down, you will lose money at a faster rate than the people who bought or have the higher priced options and the more liquid contracts.
Yeah, just because the liquidity will hold it up.
Yeah. They'll be far more tradable
Unless
and
liquidity just
exitable
somewhat
too.
comes in. Unless liquidity comes in to close the arbitrage, because the market likes to do that naturally, right?
Yeah,
To
it
close
does. Yeah.
arbitrage. Yeah.
But something like this,
Um,
where it's illiquid, there's not a lot of participants, there can be some advantage to be found. It's just, it's hard, and there is a degree of risk there.
yeah. There's one thing I kind of noticed is that going into earnings, the IV for the downside options
Mm-hmm.
were heavily like they were up a lot, and then the upper side options, but looking on the term structure, they were very low.
Okay, so that's
So
probably an effect from, you know, people betting bearishly on their earnings.
yeah,
So
and usually
people think they're gonna miss, or the majority of participants think they're gonna miss their earnings, and they're trying to capture the downside spike and vol by buying the out of the money puts.
yeah, and usually I would like want to trade against that, but sometimes the market's actually right,
Yeah,
too.
yeah.
So it's like well, what would you usually take from that? Would you like trade with that after the earnings happen?
I very
Given,
rarely play. Like I played Nvidia earnings last night, kind of just for fun, because it's so ridiculous. But generally speaking, I stay away from earnings because, especially if they're on like an S&P 500 stock, because the people that are interested in those earnings are throwing around a lot more money than I am. And like earnings are almost always a coin flip unless you're very very tied in to what that company is doing constantly. I would avoid playing earnings if there's a stock that absolutely everything about. You're on top of their sales metrics, you're on top of their EBIT, like you've done your own analysis of what their, I used to do that with GME, but like I haven't done it in a long time. You're on top of their, their EPS, their earnings, their sales, their revenues, their costs, their debt. You're reading all of their shareholder releases. Then you probably are just flipping a coin by playing earnings. Now you can always go to an earnings and be like, you can do a rough estimate and be like, oh, like the is pricing in this move, but I think it's going to be like this move, and you can short that. Um, but this is more playing volatility around earnings, which is something I do have an interest in. I just don't have any interest in playing like the change in delta from an earnings.
yeah, the thing I saw with HPQ, it seemed like shorter dated options were very, very bearish, but then the options outside of the shorter dated options, the volatility declined a whole lot. So what I thought was like maybe after the earnings to play the downside after, after the earnings when the
Yeah,
volatility fell even more, because it seems like there's some bearish sentiment on the stock just based on how many people bet against it. So
yeah,
that was my thought process there.
yeah.
And I
I
sort of looked for some of the longer dated stocks, no, longer dated options that were cheap on HP. I'm gonna have to bring it up. Let's see, which one did I get?
because
Because
you think they're
I see
gonna
you can find it
price
on the
up.
term sheet. Yeah, I got the June 18th 23 strike puts
Okay,
for, yeah, yeah, 294 DTE. So yeah, I got that because there was like some options around that area where the IV seemed super low.
okay,
And
yeah. So I mean, that's where you're looking at. I mean, when you're looking at IV, you're just looking at price. Like IV is price. So, when you see lower IV, which you see out here, especially relative to the nearer term IV. These are very cheap relative to these options. So if you're betting on that like downside move, you don't want to these will price up too if the stock goes down. They just haven't yet.
yeah, that's my thought process. Is
Yeah,
that
no,
the
that's a
shorter
good.
dated, the shorter term bearish move, it probably won't happen, but people think it's bearish, so you might as well bet with the longer dated, cheaper options, IV comparatively.
Yeah, yeah, you're
Is what I
taking. I mean, your returns obviously, if the stock tanked after earnings, your returns would not be as good as theirs, but you would still get returns. And if the stock didn't tank, you're far more insulated due to your theta and your long like your well mostly just due to your theta, but you're less
yeah,
exposed to that shift in near term volatility because you didn't overpay for volatility. They did.
yep, and also the risks are low because
Yeah.
you can size up more on that.
Yeah, I mean
You don't
theta
have to worry
theta is always a
about
great way of reducing risk in a position like that.
Yep, and maybe in the nearer term, you could even sell the higher IV, shorter dated
Yep,
position.
that's where you get into
So
like
look out for
diagonals and
that.
calendars where you sell the high IV and long the low IV.
Yep.
Yep, you got
So
it. That's right.
all right. So yeah, I think that pretty much answers all of my questions.
Awesome. Well,
Yeah,
thanks for coming
this was
out.
really nice. Mhm. No problem. Yeah, thank you for answering my questions. Oh yeah, one more thing though. Could you are you going to be adding the Russell, the RUT index
Yeah, we
to
have
the live
so we
data?
have NDX and RUT. We just haven't added them to live
Oh
data
shit,
yet.
it's not up there yet.
No,
wait, you
live
want
data.
live rut? Is that what you're asking about? Because I was like, we have rut.
Do we?
Yeah, we
Yeah,
got rut.
On
But,
prod?
You want?
yeah.
Well, it's up there now.
No, we
Yeah.
Something's
might.
fucked up with HV. I just looked at it, but dork.
Oh shit, yeah.
HV's
I
stuck
know.
on rut.
I
Yeah,
know.
Rut's up there.
Okay.
Rut and
Yeah, we
looks
got
like
rut. We got rut W.
NDX.
We got
Nice,
NDX, and
good.
NDX is the weeklies on
Yeah,
NDX.
are they
is
going to be adding them to both the live data
NDXP.
though?
Live rut's
Because
gonna be weird because
I've been watching IWM a lot, but I know that the ETFs aren't really the best for
No,
watching
Actually-
the thing to trade,
actually,
the thing to trade
for
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 small
QQQ
caps,
and
it's actually,
IWM,
IWM.
they're QQQ and IWM are way bigger than NQ, RUT, NDX.
Yep.
QQQ's
Oh, really?
like orders of magnitudes larger than NDX.
it's also
Yeah,
got
and
tons more
NDX
volume and liquidity.
And NDX is significant, but only in
Oh,
the
that's
sense of
surprising.
like how SPX
Okay.
is significant.
So
Like
I
it
guess
has
we have
really
I
big.
guess it's best to be looking at those for 0 DTEs and stuff.
They're
The
gonna be good
spreads
aggregates,
the
yeah.
spreads are a lot wider on those. You got to make sure you buy your options cheap.
Yeah,
For
those indexes are
intraday on
huge.
NDX and RUT, you want just QQQ.
I'm assuming
and
that
IWM.
most of the hedging and market maker activity happens on those.
Nope.
Yeah,
nope.
same with
Yeah.
Are
SPY
those
too.
Happens
yeah.
on IWM and QQQ.
It's also where the pores go to trade cheap options.
It's
So
no
pretty
NDX.
freaking
NDX has a
liquid.
problem in that like the options are too expensive, and they haven't
Yeah,
really
index is worth
created
$1
an
billion trillion.
alternative. Like you know how SPX has XSP and no one trades it. That's because you have SPY. But NDX, like there is no in between option between QQQ and NDX. So the vast majority of like NQ100 volume is on QQQ and NQ. And then NDX is kind of just like an outlier. Like they've tried to make so many products
It's
to trade NDX. There's like a 1/10th and a 1/100th version of NDX, and no one fucking trades them. And all they really need to do is probably have it, so it's more in line with SPX, and people would. But they've had a lot of difficulty getting liquidity in that market. And RUT is similar. It's probably a little bit more traded than NDX is, but it has the same. It has like the same issues.
yeah. I will say with
recently
the
I've noticed some things with the NDX is that there are times where I would sell call spreads on SPX, but then like I would see that there's some gamma that could expand at the end of the day on the SPX.
Mm-hmm.
So I don't trade those call spreads, but instead I'll trade them on NDX, and SPX will end up pumping to that, but NDX will stay relatively lower, and the call spreads end up being more successful on NDX than they do on SPX during those periods.
They can be,
Which
but
is
the
why
difficulty
I
with NDX is the liquidity. Like you're not necessarily
you
going to
should be
get paid.
comparing. You should be comparing NDX to QQQ at that point in terms of liquidity, because I mean the SPX is going to do what it's going to do, right? I mean it's mostly Mag 7, but it's not.
Did we drop
completely.
off?
What's up? Hello?
Hello? Can you hear me?
I can hear you.
Okay, I can hear you now. I couldn't hear you for a bit.
Oh.
Okay.
Yeah,
I was just saying you have
that-
to compare the NDX to the QQQ in terms of liquidity and price action, because as much as the Mag 7 is the SPX, it is
I think you may have dropped off again.
Oh. Me? Wait, me or Jay Fresh?
For me.
Not sure. Oh, what were you saying? About the liquidity of the NDX and stuff?
I was just saying you have to compare the liquidity of NDX to QQQ.
I don't think he
Hello?
can. I don't think he can hear you.
Testing. Yeah, I don't think so.
That's right. He says you need to compare the liquidity of NDX to QQQ.
Oh, okay. Yeah, I
Um,
can't hear. I can't hear him. So,
yeah, it might be user volume settings. Which like I think if you like hold
Has
down
he
his
muted me
picture.
at some point? Rude.
No. No. There was actually an update a little while ago that Discord did that reset all the user volume settings, which is why Dork was like couldn't hear me last week.
No, that was an actual Discord problem.
Oh, well, yeah, but it might have been that Discord problem.
No, I try.
Can I just say,
Gherk, I've worked in this industry for fucking 10 years. I would know how to fix it.
can I just say, regardless of all of the issues
hey,
that
well,
Discord
I can
has
hear
had
Dork
over
now,
the years,
but I can't hear Jay Fresh. Is Jay Fresh talking?
He's talking to you right
I am
now.
talking, yeah.
Oh,
I'm just
yeah,
saying,
cannot
I would
hear.
love to buy stock in Discord.
I
And
would
the user
too.
volume is at 100% too. So I don't know what that's about.
It's just a bug,
I'll just
with like the
I'll just make
VoIP or whatever.
I'll just make weird like
Yeah.
hand signals, and Gherk will.
Interpret.
Yeah, he'll interpret my hand signals.
Yeah, the thing I would be worried about, I guess, ultimately, is that on NDX, like getting the spread you want. Like if I got the fill I wanted, I'd have no problem selling spreads on NDX, but I think it's less likely on NDX to get the fill you want because of the lack of liquidity. Like spreads are just going to be shittier in general, and so like the payout's going to be slightly or potentially worse.
Mm-hmm.
Or risk reward will be slightly worse. So I mean, but yeah, I understand what you're saying. Like they definitely have different levels. They're not the same. You know, SPX is hitting all time highs today. Meanwhile, you know, like NDX is nowhere near its all time high.
Yep, and in
Like
ways, you know, that NDX risk to reward can be better because you know you're probably more likely to have it expire out the money because NDX is like underperforming SPX.
Yeah, if you can identify days where one index has a particular weakness versus the other, that could be an opportunity for selling calls.
And I do use the QQQ data, but I'm just not sure how reliable the QQQ data is when I'm selling NDX spreads.
I mean, I use SPX data to trade ES, so
Yeah.
Although I will say those two are probably more tightly linked. Just remember that QQQ and SPY have a lot of like end of day settlement due to the APs that it does not exist on like SPX or NDX.
Out of curiosity, what why are you
Ooh, I
trading
need to
NDX
know.
first? Oh, yeah, I left and came back in because I was on my phone a while back, and I'm sure there was some fuckery. But why do you trade NDX versus QQQ? Is it the tax
settlement?
benefit? The cash settlement? Okay.
Yeah.
There is a
just
1/10 value NDX. It's just no one trades it.
Yeah, it's unfortunate.
It's the most illiquid
like,
piece of shit.
But it's like, what's all the reasons why everybody trades SPX should translate quite nicely over to NDX. So
You'd think so, but people are more interested in trading the S&P. It's more balanced and less risky. I mean, even NQ, which is probably the epitome of NQ.
If all everybody's doing selling shit, and they think that tech is volatile and AI is bullish and all that, then sure. But
I mean, there's just never been as much interest in the 100-weight basket versus the 500-weight basket because risk is insane. Like NQ is drastically more illiquid than ES. It's just the less popular index.
The same stock in one is the same stock in the other. Though.
I know.
We're all
but like for instance, like NASDAQ is like it has a significantly heavier weight of Nvidia than the S&P does.
Yeah, I know.
Also, like downside on the S&P is a lot more significantly protected by sector rotation. So if there is like a risk-off event, SPX generally falls slower, and Nasdaq will just tank, which is a big consideration if you're selling like if you're selling vol. Like you don't want to sell vol on NDX; you get fucking blown up hard.
Is I sometimes trade XSP on smaller accounts. It has enough liquidity
It
for
can,
that sort
yeah.
of thing.
Not my
So
favorite, but
what's
it can.
the NDX one? Uh,
What's that?
what's the 1/10 NDX index
Oh,
called?
I can't remember the name of it. I could look it up.
I think it's called TURD.
Yeah, generally XSP is more popular when SPX options get to be so expensive nobody can afford them. So if volatility is really high, people drift over to XSP a little bit, but it's not that dramatic. MNX. MNX is and then there's also XND, which is 1/100th of NQ or NDX. And there's NQX, which is 1/5 of NDX. So they keep trying to release products and no one wants to fucking trade them. Pretty hard to beat like MNQ, probably. I would say QQQ, MNQ, and then
all I'm gonna say while you're thinking of that is one person at one point asked the question of why doesn't your aggregated data, the macro data, include NDX? And I took that to heart so badly that I filled 7 years of it historical.
oh god. That probably had almost no relative change.
It's $20 billion. It's not nothing.
It's kind of almost nothing.
It's like twice a micro strategy.
SPXW has like
Oh god, our service didn't work.
no, I typed in the wrong thing. SPXW has like 50 times more delta.
Yeah, now do SPX.
That's even worse.
Boom.
No, just
Yeah, just is the market. Yeah.
yeah.
That's more in line with Nvidia.
Yeah.
Yeah, but yeah, $20 billion isn't nothing. It's worthwhile to keep tabs on it.
$4 trillion worth of fucking delta on SPX.
Hey, you know what?
What?
You're gonna take it and like it.
I love it. I have an options data platform in a world where options are becoming increasingly the choice for investing.
Oh, did you see recently that there are now more ETFs than there are stocks?
Yep.
Oh, yeah, I saw
Yeah,
that.
that's
Yeah,
cool,
that
right?
was crazy.
That's pretty cool.
ETF bubble.
It's not a huge contagion risk at all, right?
This is the alternatives era.
I'm sure all
We
of
buy
those
assets.
ETFs actually own the stocks they say they do too.
We buy assets and we make them better.
It kind of seems like a setup to the Big Short again. Just except it's with the ETFs, so you're buying the same stock over and over again.
Yeah, I was ranting
the
about
big
that
long.
shit. I was no joke ranting about that shit like 3 years ago. I'm just over it now. My
Grift goes on. Yeah, grift is king.
yeah.
Yeah, Gherkin and I have had many a late night jerk over just how absolutely messed up the ETF liquidity machine could get given
Jesus.
you know,
I don't even want to think about it.
unfettered growth. It's insane. Yeah.
It's like we're at the point now where everybody knows Sam Altman is a scam artist and nobody gives a shit because number goes up.
Yep. Even Sam Altman came out and said, I'm a scam
like, this
artist.
might be about, yeah. He went with like, yeah, so I'm not feeling the AGI anymore. That term is derogatory. We don't use that anymore. That's like the N-word, that AGI term that I said was coming in 6 months. That is not allowed anymore. And he said we might be in a bubble. And everyone doesn't give a shit because number go up.
You know, I remember in 2001, a certain CEO of Sun Microsystems looked at all of his shareholders and said, what the fuck were you people thinking?
Yeah, price of sales is 10. What's the price of sales right now of NVIDIA?
Oh, Jesus.
Yeah, I think they just started betting on Nvidia getting a whole bunch of corporate investment, even though the companies that
No,
are investing in
no.
Nvidia are consumer-focused
No,
companies that will eventually profit.
the only thing that could save Nvidia at this point is investment by the state. This is why tech is all lining up to kiss Trump's sour mushroom, because the only thing that can save them at this point with the dollars that are on the line is the state.
I kind of think Intel is probably the only one.
I don't think the
maybe
state
Apple,
can save
that's
anything.
gonna-
No, I
The
mean,
state's broke
I think
as
it will
fuck.
ultimately, yeah, I think ultimately it will be a. They'll give it a try because Trump loves a little sucky suck, but
We're at a tipping point right now. Either all of the hyperscalers leverage their debt to the tits to try to beat each other to have the best AI infrastructure, or they go, fuck this, I'm not buying it, and everything comes crumbling down. Doesn't matter
yeah,
which
I mean, but
which
here's the
road
thing,
they
it's like
choose, it all blows up.
60% of me says that this would have already blown up if XAI didn't enter the field and start just buying 100,000 H100s.
No, they got to do something with all that money before it's gone.
So Elon Musk,
dilute
if you
when you're
hated him
out.
before, he is the problem now more than ever. He's also destroying Memphis, Tennessee, like absolutely destroying it.
Okay, I don't care about Memphis, Tennessee, though.
You know what? My grandmother lived in Memphis, Tennessee.
Does
and
she
I
still
buried
live
her
there?
in Memphis, Tennessee. No, she's buried there.
Oh, well, she's dead, so it
And
doesn't matter.
I got a traffic ticket on the way to her funeral, and I am not over that.
You should probably also hate Memphis. It doesn't sound like it's attached to any good memories.
Well, you know what?
All right, I think that's
on the subject of state-backed stocks, like that's kind of what Japan does, isn't it? They buy corporate bonds, then they prop up their markets. And
I mean, the Fed does that. The Fed buys corporate bonds, but no. This is Trump's like new version of socialism is well, it's just national socialism, which the Nazis did. It's literally like de facto the same thing Nazis did with industry in Germany pre-World War II.
Dare you overuse Nazis?
Nazi,
you can't even
Nazi.
say Nazi anymore because like nobody.
Because I have Trump delusion
like,
syndrome.
No. Trump derangement syndrome.
No, whatever.
Is what you would have, but the person who accused you of it has Trump delusion syndrome.
Yeah.
So now you're at a stalemate because who's worse?
Nothing like having somebody who's doused themselves in Trump's newest cologne tell me I'm deranged.
But here's the thing: who's worse off, the person with TDS or the person with TDS?
Stupid people are happier. That's just a fact. If the dumber you are, the happier your life is.
I was trying to be clever, and I feel like you ruined it.
I know. I'm sorry.
Also, I'm wearing the Wendy's red hair on my.
Yeah, but not when you talk.
Smoking a cigar. And
when you talk, hilarious. You turn into Wednesday Addams.
I know.
All right, man. Thanks for the questions. Appreciate having you up here.
They transferring the. It's okay.
Have a good night, dude.
You too.
Look at the smart guys bring each other down.
I mean, that's been the summary of the last 3 years, honestly.
Yeah,
2
just
years,
Pretty much.
two or 3 years. Yeah, we just shit on each other until we do something that's worth doing.
Yeah, pretty much.
we're just in the grind together.
Well, yeah,
You got that
it's,
grind
you
set.
know,
Yeah,
iron sharpens iron kind of
Yeah.
thing. Yeah,
Somebody
Jinjin
say
wants to go
baby
to bed.
farms?
We should. Yeah, Jinjin did. Jinjin's like, I gotta go to bed. I gotta fucking work in the morning. My
Yeah.
kids have
Yeah,
off
so do
tomorrow,
I.
and I'm going to a wedding this weekend, so I'm starting the weekend early.
that'll be fun. You gonna get real drunk? Don't forget
Probably.
that we have an important thing on Friday.
I know. I vote yes.
Okay.
Awesome.
I'll try to pop in, but I don't make any promises.
Yeah, no, it's fine if no one's there. Just me.
Yeah, it's just our annual meeting. Whatever. Who
Yeah,
gives a
it's not a
shit?
big deal. I'll just pay all the bonuses to whoever's there.
I'll just get Jay
Carl's
Fresh's
gonna be
bibs.
so rich.
I'll come.
I can't wait to buy.
Willie's
Can't wait to buy
in.
Jay Fresh's bibs on a loan. Predatory loan.
As
No,
a
Address is
predatory.
in what is it? Wyoming.
what? No,
No,
I don't
it's
know.
on Mars.
Just talking about the website.
Oh,
As always,
No,
if
couldn't
you
possibly.
if you guys want to check us out, you can visit us at app.gammastrike.com and read the documentation section before making any
There are
decisions.
0 people on here that don't know who we are.
I know. It's midnight. There's no one left. I don't know who I'm shilling to. There could be
The
one
only
person.
I don't.
You never know.
The only person I don't recognize on the list I'm looking at is Windmill Willie. Who the fuck is that?
You know exactly who Willie is. Oh my god, he's leaking